What about Deutsche Bank's point yesterday that NVIDIA next week may not beat as much on revenue as they normally do? Average beat on revenue last 5 quarters, $2 billion.
I think that could be true. You're still dealing with the idea of a yield on Blackwell, their current generation. Yield being not all of them are done. You might make for every 1,000, maybe you have to throw away like 400. So the gross margin is not going to be what people want. I don't think there are going to be as many watch parties as there are for Saquon Barkley.
Whoa.
My understanding is this will be closed as soon as early next week. And they're going to just keep buying those H100s. He's, again, in only the way Musk can. And the Information did a very interesting story on this a few days ago. I mean, what they've done in Memphis in as short a time as possible to build this data center and to network all of these H100s is nothing short of, many say, somewhat miraculous, so much faster than any other company can build a data center.
It also may be one of the reasons why I know that I'm not looking for a big upside surprise in NVIDIA, but the H100 is not the current. That's not the most current
no,
GPU.
Blackwell is, but
what's great, H100 and H200 Blackwell. Here's what's interesting.
Maybe if you've already started with H100s, you got to, I don't know.
Well, okay, so what Jensen would tell you, Jensen Huang, the CEO, is that they're all cumulative because they use software, and it's not like a 46 and then you want to turn it back as a Pentium. You do the H100, it works well with the H200. They don't depreciate.
Right.
And Jensen mentions the greatness of working with Musk on this self-driving, and right now, Musk still says that Jensen makes the best chips. He's not. It doesn't seem like it's very begrudging.
Yep.
You say like, yeah, Jensen's good.
Jensen was quoted as saying, as far as I know, there's only one person in the world who could do that, and that being putting together in 122 days this Colossus. That's what they actually call it on the supercomputer. That's housed there.
One of the more interesting dichotomies within tech is the software versus chips debate. How do you want to be positioned? And the chips look like a mess right now. First of all, the ratio of NVIDIA to SMH is at an all-time high. So as great as NVIDIA continues to act, the rest of the group is fading hard. From election day through today, NVIDIA is up 8%, the SMH is up only 2%, which sounds not so bad, only up 2%. But when you look at the fireworks that we've seen elsewhere, it's a big laggard group. Now you have an index that is 2% below its 50-day, only 2% above its 200-day. And within the SMH, when you look at the names, Judge, the median RSI for the group is 39. NVIDIA is 54, the S&P is about 52. So the stocks are ice cold. Only 28% of SMH names are above their 50-day, and the rest are in like little mini bear markets. So that definitely makes an impact on psychology, people being a little bit choosier when they go into tech. And I think trying to be positioned in areas where tariffs aren't so much of a big threat, international trade in general is not so much of an issue. And that, I think, explains why we are where we are. Mm-hmm. And it's where people are putting money to work currently, anywhere but semis.
And the performance of the hyperscalers are uneven, or is uneven, excuse me. They're obviously spending a lot of money with NVIDIA. Shares are up 16% in the past 3 months. Amy, you own NVIDIA.
I do.
Tell me your thoughts on this.
We've owned it forever, and I keep trimming it, and it's still the largest position in my portfolio. It just keeps working and keeps working. I'll probably trim it again. We have a big issue with gains in the stock. Our clients are very tax sensitive, and so that becomes a big issue. But look, I think this continues to work until they sort of eat through more and more of this backlog. I think that's at some point in 2025. Not exactly sure when it is. We'll talk a little bit about this new raise by Musk's AI company. But
yeah. So, well, this is your largest position now.
It's my largest position
NVIDIA.
Just because of movement, because it keeps working so well. But I've trimmed it multiple times this year.
Josh, how are you thinking about NVIDIA going into the report next, I think it's Wednesday?
5 straight quarters of triple-digit earnings growth is the reason why Amy and myself and many people have clients with really big embedded tax liabilities here. It's a really tough thing. We utilize custom indexing so that we can algorithmically tax loss harvest against some of that position. But to Amy's point, the stock just continues to strengthen. They gave guidance for this quarter they're about to report, Judge. They said $32.5 billion. So the prior consensus was $31.7 billion on data center revenue. From my perspective, if they can do the $32.5 billion plus on data center revenue and not disappoint on raised guidance that they themselves just gave the last time they reported, I think you're okay in the stock. But I want to remind people, this stock, even with good news, has had a history of really short, really sharp drawdowns that can shake people. And as recently as this August, September, the stock was in a 24% correction, a bear market. It didn't last long. If you blinked, you missed it. But if you're in this name, just be aware of that potential. And it doesn't mean NVIDIA is a good or a bad investment. It's just the nature of the stock. Not only does it infuriate people who missed it, it also doesn't make it easy always to stick with it because of that beta. And you've got to accept that if you're going to be part of this trade going into an earnings report.
But if you needed another reminder of just how influential NVIDIA is and how much it's going to remain so in the great AI build-out, you look no further than David Faber's reporting of earlier today, when Musk's XAI is raising as much as $6 billion in new capital, post-money val of $50+ billion. What are they going to do with the money? Well, they're going to buy more H100s, 100,000 of them, by the way, for the new data center they have in Memphis.
Okay, let's move on to the chips. You chose NVIDIA. It's always hard to tell if people are going to love or hate kind of the leader in any given space. You're liking it today. It is down about 4% this week. It's tripled on the year. It's also down 4% today. Why?
Because there's nothing else out there. You're going to do a DRAM play on Micron. You're going to do a relative valuation play on QCOM. They have the only thing that exists. And so while I hate the concentration, I hate breadth, I'd rather wallow around in small cap value like it's 2002. If you're going to bother in chips, just go for the 800-pound gorilla and go home. It's Friday.
It's been a really interesting, view of how semis have traded versus software, for example. The latter up, the former down. You say that you want to rotate out of semis broadly. Can you be more specific on why you think that and how broad?
Yeah, look, I mean, it's relative performance for us, Scott. That's where we draw the line. And so we've seen most of the trend conditions in an equal weight relative performance on the semiconductor index for the Russell 1000, really with the exception of, say, Texas Instruments, Broadcom, and NVIDIA. There's a lot of bad charts there. That's everything from Qualcomm to Microchip to to Micron, for that matter. So NVIDIA is kind of the exception to the rule, and that always makes us nervous when one stock is swimming against the tide of the entire group. Forget the market, but when it's swimming against the tide of its own group, that's usually something that we try to avoid in mass. So we're a little bit more cautious on NVIDIA probably than you might otherwise expect given the chart.
I mean, is one tide, though, if NVIDIA delivers a blowout quarter, is that enough in and of itself to raise all the other boats?
It might be, but your previous guest hit something. Professor Siegel hit something really important, right? It's priced for upside, and so there are high expectations, and that's usually a point, particularly when you have deterioration in the group, that you want to be careful. I'm not overly bearish on NVIDIA. I just think it probably trades closer to 120 before we're all said and done. I would say if we get a good oversold condition in NVIDIA, that might mark the interim bottom or interim low for the group. So that actually be kind of exciting for us to see that, because they'll usually take out even the leaders by the time the group makes some type of low. So seeing an oversold condition in NVIDIA might actually be a cleansing process, not all that bearish. So I just keep that in mind. But I'm not going to swim against the tide of the group with one name, even if it is a dominant player in AI, given the expectations where they are today. And you mentioned software. I mean, lot of the software names are improving. They look better. We think that it makes a lot of sense to reallocate dollars away from some of these deteriorating semiconductor names and look at some of these software names that are starting to break out because they do have good momentum there.
NVIDIA next week. Let's go. Next Wednesday. The trade hasn't done well. What do we think?
It hasn't done well. It's been hanging around now really at the levels that were the highs from back in the summer in June. What I think is fascinating is if we didn't have an election to kind of preoccupy ourselves and all the attendant issues, I think we'd be having a much louder debate about AI and whether, in fact, it's hit a wall. I know there's been a lot of this chatter. Sell-side notes are trying to play one side or the other, but some folks inside these, training models have been saying, the next generation has just not been as big a leap as we expected or as the other ones. Now, question is, does that mean you just have to throw more hardware at it and make sure that you redeem what you've already invested, and that would be favorable to NVIDIA? I think it's going to be trading off of 2026 demand estimates once we get these numbers on Wednesday. Not so much about what the latest quarter reported. But, as Jeff DeGraff was saying, overall semis have been a big liability for this market. And the question is the other platforms, right? I mean, you have some of the other, the Amazons and the Microsofts have been very, very, had a hard time getting out of their own way.
We're counting down to what might be the biggest earnings report of the quarter. Yes, we are. NVIDIA releasing its latest numbers on Wednesday. What to expect from the quarter, and will it take shares to even higher highs? What else? NVIDIA, the AI darling, gearing up to deliver third quarter results next week, and Wall Street is chomping at the bit for another strong report. Analysts upping their price targets on the chip giant ahead of Wednesday's results. Wedbush seeing the stock climbing to 160, Oppenheimer's at 175, Susquehanna 180, and HSBC is all the way up at $200. That is 40% upside from today's close. But can NVIDIA deliver another blowout quarter with expectations so high? Yet again, this is not the kind of action, Karen, that you love for one of your stocks going into earnings.
Well, yes, I don't like the analyst action.
Yeah.
That's what I mean. The bar, just raise the bar, raise the bar, raise the bar. I do like the, down kind of
Pullback
a lot.
today.
Yes, the pullback, not just today, but the last couple of days. I think it hit 148 or 9 or something recently. And so I like that more. I think, there's this sort of tension of the promise of AI and is it working, and what will demand peak, and then evidence to the contrary. And then you hear, things like, what was 100,000 chips today, right? So I'm still optimistic on the story. I am long. I don't have puts right now, so I don't know. I'll look at something. They're not going to be cheap, that's for sure. But I do think, though, going into the right before it, the skew will be toward the upside. The calls will be more expensive than the puts. So I'll look at that. But so I'd rather have it be down a few days.
Right, Tim?
Well, if you look at the semiconductor group overall, they've been underperforming. NVIDIA's actually been really the stalwart in that space, and I think that's interesting. I get back to what seemed to be the major drivers for the stock right now. Where are we on production with Blackwell? Where are we with hyperscalers and CapEx? We've had the earnings season where they've given some guidance. That guidance was fine. We've had some other read-throughs from other folks that are part of kind of the chip infrastructure space, which hasn't been terribly good. And it gets back to where is the market and where is sentiment. That outperformance I'm talking about in the charts is notable, but I don't get the sense that the street is as keyed up into expectations on this number for some of the reasons we've been talking about. And again, we have had the company be very clear to push back on any concerns around production side of it. So they can't really tell you how aggressively they see demand, and they'll do a better job of that here. I'm sure we're not going to hear anything awful on demand, but I think it's a more balanced setup despite the run in the stock, because I just think expectations are lower.
Eventually they have to fail on earnings. Eventually there's got to be something, right? So you don't get to go into Vegas and keep betting on one thing and have the hand perform. Eventually, but there's still 85% of the market. Tim said it. Every other stock that you look at in the sector, the chart is horrendous. This is go ahead.
No, I mean, eventually you will miss, but I mean, is the miss a function of analysts getting too hyped up over it, and so therefore they're setting the stock up for a miss? If they didn't ratchet up their earnings expectations, they would easily jump over them. I mean, it's all a matter,
question.
Right? It's the context of
It's a
that.
point of reference. It's where you're coming into it. So Karen's completely right. You would like them to talk it down. The problem is every time they've talked it down in the past, it's leaped over them. And they've looked silly.
I'm sorry, when you're saying the analysts talk it down or the
They don't really talk it. I'm saying it the wrong way. Whenever the analysts put out their estimates, they've definitely had a lower bar where NVIDIA leaps over it. And they've looked ridiculous. Because who should know? They should know how high that bar should be in theory. And whenever NVIDIA leaps over it, they look silly. So they keep raising the bar. So eventually, NVIDIA has to fail.
But it's going to be a beat and raise here. I mean, let's be clear.
It's just a matter of the degree.
It's a matter of the degree, but again, I think it's really about Blackwell ramping and Hopper actually still growing. And I don't, yeah.
Yeah, Julie. I mean, Jensen Huang has had multiple opportunities to sort of talk down Blackwell, talk down the demand, talk down the production issues, whatever, and not one opportunity was taken.
Yeah, it sounds like he's very, very confident about the outlook. I think, it's interesting to me in reading some of the research reports that we've been talking about. I read one today that was like, well, we expect them to beat by their usual $2 billion on the top line, which is an astronomical number just to beat by. I mean, as a small and mid-cap investor, I could only dream, right? But what I think is important is exactly what everyone is saying, which is this relationship between expectations and execution. And so far, they have been on the right side of that battle between those two. But when you have analysts just so regularly expecting this big beat and raise, it does create this challenge, this tightrope walk that they have to do. I think the demand is fine, and I think the production is fine. What I think is kind of an outstanding question for the long term, and this is where guidance will really come into play, is what is pricing going to look like over the longer term? We know that these hyperscalers are starting to recognize that they need to be able to create an economic model around this investment, and that's still a little bit uncertain. And so, we kind of wait and see.
So, I mean, I agree with the beat and raise, but a beat and raise can still trade down, all right? We've seen that before. There's no floor that's guaranteed under there. But Jensen Huang, beside running this company and being at the forefront of AI, is also a master at expectations with Wall Street. And, what else can he introduce? Remember, it was, well, we're going to have a new chip every year. That was something. Right. Locking him in with the software. I mean, he's really good at sort of moving to the next chapter of the story. Right. And we'll see if he does it again here. Right. The bar's high for him.
I mean, there's also, you mentioned the hyperscalers and their guidance, which does confirm the NVIDIA story. I mean, there's nothing that we got from the earnings report that leads us to believe that spending is in jeopardy for NVIDIA chips. There's also the other side of sovereign AI, which we haven't even talked about. No. I mean, think of
demand.
As demand from demand. From demand in terms of all the sovereign money out there, particularly in the Middle East, who are going to build their own AI.
I think that's important. I think we know that there is, kind of GPU demand is supply constrained here for cloud growth. It's just that simple. And so I think that's the story. But I do think it really is going to come down to what you're willing to pay for this company. And I think the growth is probably, forget on a price to sales, but, I think on a PE basis, I think there's something here that's actually at least defendable if you're out there right now long NVIDIA.
Yeah.
It looks like to me, so it's hard not to be bullish on NVIDIA, right? We've been talking about this for a couple of minutes. It's hard not to be bullish on NVIDIA. But one of those days, it's not going to be a beat and raise. And to Karen's point, you can have a stock fall off.
Time out.
Here we go.
Yeah,
Look out, Steve.
I got to do it. I feel like it was pulling me in.
You sold NVIDIA.
I did.
Did you get back in?
No, I might be waiting for a sell-off.
You're the one.
Get back in, Melissa.
You are feeling like you missed it.
Yes, I definitely missed it from 110.
But that's the context
from 110 to where we're at right now. So and you're waiting for that sell-off to get back in.
Let me ask you this. Let's say you had gotten back in at 112. What would you do right now?
I'd sell?
Yeah, I'd be a seller. That chart looks the chart does look like it's rolling over. And when you start to see 80, 85% market share turn into 70, 75, I don't know if we're there yet. I think you got to start saying, all right, maybe there's other opportunities.
I want to get out of the way and have Julie pile on Steve, too. So, all the ladies can really get after it.
Come on in, pile on, Steve.
I agree. I mean, I absolutely agree. I think that's right. It's really, really hard to feel like this can continue forever into infinity. These growth rates are not sustainable forever. I think, we've owned in other portfolios NVIDIA for more than 10 years, right? And I think all of us at the firm are looking at this very large now position and wondering, what do we do with this, right? We recognize that it's a market leader. Our cost basis is very low. It's really hard to feel great for new clients coming in and buying our portfolios. They're buying at this price today. And that's where it starts to really not feel great as a portfolio manager. You really have to be thoughtful about, do I still feel great about the valuation right now? Would I buy this position right now?
Have you trimmed at all your position in NVIDIA?
Not in a long time. No, I haven't.
Okay.
I just made the bet. But to Julie's point, I always say if you went home long,
right,
you bought it at this price.
Sure.
So I'm affirmatively saying, all right, I will continue to be long.
41 times forward, yeah. This is still worth it.
Well, and if I can go out to I can go out to 25, and at least a couple places that have put some recent upgrades, and I can get a low 30s PE multiple on a stock that I think is growing. We know about the growth, but I mean, again, I look within that peer group, and NVIDIA doesn't feel expensive to me. So I would bring it back to valuation. I would bring it it's not going to go on forever, but by 25, and certainly based upon the growth we're imputing until then, 32, 33 times, it works.
All right, our next guest is concerned about NVIDIA ahead of earnings. Mark Yusko is CEO and Chief Investment Officer at Morgan Creek Capital Management. His firm has $1.9 billion in assets under management. Mark, always good to see you.
Hey, Melissa.
As I understand it, Mark, you'd personally sell NVIDIA here. Why?
Well, a couple reasons. I mean, one, all the things that the crew was talking about. It's hard to stay on top when you're on top. I'm old enough to remember that Intel stock went up 20-fold over 10 years because their chip was going to revolutionize AI in 2000. And today, that stock is 63% lower than it was 24 years ago. So you don't stay on top forever. And NVIDIA came along and invented GPU, and now we got TPUs and VPUs and LPUs. So I think innovation will keep rolling. But the thing I'm most worried about with NVIDIA, their third largest customer is about to get delisted. That's a big story.
So you're referring to Supermicro.
Yes.
So how does NVIDIA get caught up in this? Yes, Supermicro can be delisted. How does that tarnish NVIDIA?
Well, if it's your third largest customer and they actually they don't have the capacity to continue to be your third largest customer, what happens to your revenue growth and profits growth? We've seen this movie before with Nortel and Cisco back in 2000, 2001. So I don't know. That makes me nervous.
Hi, Mark. It's Karen. Thanks for being on. I hear you. Let me just push back a little bit. Sure. To the extent that there is a supply constraint here, not a demand constraint, right? So with the customers, if you look at what's happening to Dell and some others, there's the belief that those customers are going elsewhere and that demand would still be there. Is that, does that make sense?
I think that's a great story and possibly is true. Look, they're the third largest customer for a reason, and that's real for me. But I totally agree with you that there is a demand story today. I think the thing that's not being talked about enough is GPUs are really good for training. They're actually not really good for inference. Inference is the next level. So companies like Grok and others do. And the next layer of huge demand in semiconductors, I believe, is going to be for inference-focused chips, new designs, new innovations. And I think the tech debt at NVIDIA is going to cause some stress. Now, could they go out and buy some of these innovators and take over those markets too? Maybe. Hasn't historically been the way it's worked out for other people who are on top. But look, I'm a huge admirer of NVIDIA as a company. I think they have great products. I just think it's a little overpriced here.
You make a pretty strong case against NVIDIA, Mark, but as your clients still own it. So how do you What's that conversation like when you're telling, or what's the conversation going to be like on Monday when they start calling you saying you said to sell because they're going to lose their third biggest customer and all sorts of other things, and it's in my portfolio?
So, a couple things on that. One, I spend most of my time now in venture capital. I do venture capital in the digital asset space. We own things like Bitcoin and companies that like Coinbase. I still have a business that focuses on hedge funds, and we allocate capital to hedge funds, and then we supersize their 20 best ideas. So one of those 20 best ideas happens to be NVIDIA still. So it's a 5% position in that half of the portfolio. And I trust the process. Those managers still have faith in it, just like a number of the people you were just talking to. If it were me and I were the portfolio manager, which I'm not, right, I would be a seller, but I trust the process on the other side of the house.
All right, I hope you're all doing great today. The S&P finished the day about 1.3% lower, and NVIDIA finished the day nearly 3.3% lower. This is after Applied Materials earnings yesterday, and after we got some economic data this morning that caused market participants to reduce their bets on future Fed rate cuts. It's very interesting what's happening in semiconductors right now. There's been a recent divergence between semiconductors and software, and there's also been a divergence between semiconductors as a whole and NVIDIA. We've seen that demand for non-AI semiconductors has not been great, while demand for NVIDIA's AI chips is insane, leading to the divergence we're seeing between NVIDIA and most of the other semiconductor company stocks. Looking ahead to NVIDIA's earnings next week, I'm expecting NVIDIA to report great numbers and raise their forward-looking guidance. I have no idea how the market will react to NVIDIA's earnings in the short term, and it does concern me when I see analysts raising their price targets and earnings estimates right before earnings. This raises the bar even higher than it already was, and it was already fairly high. Regardless of that, as long as NVIDIA reports solid numbers, increases their forward-looking guidance, and the overall thesis remains intact, then it doesn't really matter to me what happens in the short term. As long as the overall thesis behind NVIDIA and the build-out of AI data centers remains in place, then I am bullish on NVIDIA long-term. Really quick, I want to address something that was mentioned in one of the clips you just watched, and that is the concept of the rate of AI advancement slowing down. This is a common theme whenever there is a new breakthrough technological advancement. During the early stages of the new technology, the rate of improvement is massive from one generation of product to the next, but as time goes on, the rate of improvement gradually slows down over time. I'll give a couple of examples to illustrate what I mean. Think back to the first 10 or so iterations of the iPhone. In the early days of the iPhone, there was massive demand and excitement surrounding each new generation of the product because there were substantial improvements from one generation to the next. But now we go from one generation of iPhone to the next, and let's be honest, not much changes. There's not really that much of a difference between the newer model and the model that preceded it. Let me give one more example: video resolution. We went from 480p to 720p, and there was a massive noticeable improvement. We went from 720p to 1080p, and again, a massive improvement. We went from 1080p to 4K, and once again, there was a noticeable improvement. But now we're at the point where 8K displays are on the horizon, and a lot of consumers are thinking to themselves, do I really need 8K? 4K is good enough for most displays. In both examples of the iPhone and video resolutions, there were massive improvements during the early stages of the technology. But the rate of change gradually decreased as time went on. And that is a long-term concern that I hear a lot when it comes to NVIDIA. And I'll be honest, I do think it's a valid concern to be aware of. But as for right now, the demand for NVIDIA's products is insane. The improvements from one generation of product to the next are substantial. Hyperscalers have yet to show any signs of slowing down their capex spending on AI. And we have a very clear product roadmap from NVIDIA for the next 2 years. This year, we get the launch of the Blackwell platform, then Blackwell Ultra in 2025, and later on Rubin is scheduled to arrive in 2026. And therefore, as long as everything remains peaceful in the Pacific, and as long as none of the hyperscalers significantly reduce their capex spending on AI, then I think NVIDIA should be just fine for at least the next 1 to 2 years. I seriously would not be surprised if this company doubles over the next 2 years given NVIDIA's current growth trajectory and upcoming product cycles. Who knows what multiple market participants will apply to the stock during that time. But if the underlying business grows, then the share price is of course likely to follow. I am not concerned about any tariff situation as it relates to NVIDIA, and I honestly think that is just short-term noise that does not matter to NVIDIA over the long term. I'm also not concerned about the Supermicro situation at the moment. Let me be clear, as long as that situation is unique to Supermicro, then I don't think it matters to NVIDIA in the long term. If Supermicro were to stop buying from NVIDIA, then NVIDIA could just redirect that supply to the other companies that are waiting in line for whatever they can get from NVIDIA right now. As long as there is peace in the Pacific, and as long as none of the hyperscalers significantly reduce their capex, then I think NVIDIA should be just fine for at least the next 1 to 2 years. With all of that being said, I hope you all have a fantastic weekend. Thank you all so much for watching these videos. I really do appreciate you being here. And with that, I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.